Here are certain things you could do to reach financial freedom depending on your age. So around in your 20s, you should be working to increase your savings rate as majority of the people. Many people recommend at least around 10%, but I prefer a certain percentage of your income would be better for a saving rate, which will really depend on your situation. Like for me, my saving rate equals to around, it's about 70%. And a lot of people do not believe it because I like to take the money and invest back into my businesses. And for example is after taxes, I take it all and reinvest because I know I can grow it. And my lifestyle, I live really frugally compared to majority of people. It really depends on your lifestyle. Not my situation will not fit into everyone else's situation. It really depends how you do it. So, well, besides that, and I do splurge every now and then, as you can see. But the most important part is you get into a habit of budgeting so you can make better financial decisions. First, you gotta set realistic goals and do not be over ambiguous about it because your retirement or saving goals may lead to unhealthy decisions for your finances to reach that goal. Like for example, when I did it, I knew that this is gonna be a painful process, but I adjust to it and it works for me. It will not work for majority of the people for my method. If it works for you, then that's great. Basically, it goes well for you, but doesn't apply to everyone. It's also very wise to learn about investing and make sure your wealth stays. A lot of people make money, it goes away. When you have time on your side, you can take advantage of it and learn the basics of investing and compound interest. Because automating your investments will take you and give you a big paycheck overall and eventually grow. When you automatically invest, you don't have to worry about it. It takes a lot of ease and burden off your mind. Now, if you're waiting until you hit your 30s or let's say 40s in this case to be saving, it will be really detrimental in reaching your savings goals because if your workplace has a retirement saving bonus, you have to make sure that it's enrolled in it because you can get more out of it based on your contributions. So always make sure you have initial contribution rate at a level that will qualify for the matching contributions that they offer to on nearly all employees. Now, this does not apply to you if you, let's say, you're a business owner because this applies to majority of people. If you're not going to be a majority of people, then make sure to learn about investing. If you learn about investing and learn about different types of ways to make money, then you're ahead of like 95% of the population. Now let's look at another example. So if your workplace does not have, let's say, a retirement plan, you should check on an individual retirement arrangements. For example, SEP IRAs, which allow you to contribute more each year than, let's say, your traditional IRAs. This will help you reach your retirement savings goal if you're a, let's say, contract worker or an independent gig worker, because there are a lot of different types of styles of investings and there's a lot of different types of styles of taxes. While you're in your 20s, you may have yet to hit your peak earnings in this case. This also means that you have not hit your peak income tax rate. Now, while you're in a lower tax bracket, a Roth 401k or a Roth IRA in this case, the money account grows tax-free and qualifying withdrawals are also tax-free. Now, by your 30s, you should be aiming to increase your savings rate more, and by people in their 30s, they usually have more income due to their experience in their job. Let's say if you have debt, aim to tackle that debt in this case, especially like student loans, you have like credit cards. You should be wary of lifestyle creep so that all that income from your pay raises is not all spent. Of course, you are allowed to buy basically luxury goods and items. For example, I do it from time to time, but make sure you have enough money to pay for it. Take a day to think about it. And when you think about it, you still wanting, then go for it. Go ahead and go get it. And usually I keep a rule of having 2 to 3 times more than amount you have in your bank account to pay for that item. Never finance an item that's not an asset in this case. Now, in your 40s, make sure you have investments that are secure when you hit your 40s because you can always carry higher stakes when you're in your 20s or 30s. But as you get older, you don't have as much time to recover from your mistakes. In just case, let's say you make a bad financial decision or the market does not perform in a way that you like. For example, 2008 and 2020. It's a good way to check on all investments from your financial advisor. You want to have a good life insurance policy, especially when you have kids. If you pass away, which like unfortunate reasons and accidents that do happen, your kids can't be covered by the expenses that need to be paid until they are 18. Now you're looking at term or permanent life insurance. Term life insurance is generally cheaper as the insurance plan for a set amount of time, roughly for a few decades in this case. Now term life insurance is generally fit for people who are looking for more affordable temporary coverage, while permanent is more flexible and can earn interest. Now make sure you have a good life insurance that always suits your needs in this case. Now looking at between the guides and between ages brackets, well, the more earlier you invest, the better, like in general. For first, you just have to take that first step through the door. Second is when you open, like, let's say things like Roth IRA, you open investment accounts, start like basically getting a habit of putting money into it. And besides saving, a lot of people talk about saving money. Saving money is only part of the equation. Saving money is only allow you to invest in that money. If you save money and you don't invest in it, it's basically the same thing as just spending it, because you're losing against inflation and you're losing against how the American economy works. You think about American economy, it's 2% basically around inflation rate per year, meaning prices of goods should go up around 2% per year. Just think about it. Think about when they lowered interest rates. Why don't they lower it all the way down to zero, or in this case, try to go for deflation? Because the goal of the economy, the US economy, is to have inflation rate of 2%, meaning goods and services will get more expensive over time. And meaning your paycheck will also have to match it, but unfortunately, thanks to 2020, it is not even coming close to matching it. So that's it for this video. I'm not gonna tell you guys to like, share, and subscribe. And since I'm a pretty new creator, and now I decided to, since we have a really small community, I'm gonna make a Discord channel, and I'm gonna link it down below. And I know some of you have asked me questions in the comments, and especially emails. Really unfortunate, I'm really busy right now, and I haven't replied to any emails, so I decided the best place to reach me would be on Discord, since Discord's linked to my phone. On Discord, when someone messages me, I have other people who are going to check on it and maybe ping me, so they'll notify me. So if you guys are looking for, let's say, questions about taxes, maybe questions on what do I do for my investments, questions on what do you do, because let's think about it. Every person's situation is different from every other person's situation, meaning my ideas might not fit you. Most likely it will not. Like, for example, me saving 70% of all my income after taxes and using it straight back in investment would not work for a majority of people. It's only in very specific cases, and every case has a different type of solution. That's it for this video, and if you guys join my Discord, I'll see you guys over there. Peace.